Given the market swings over the last week, I thought I'd take a few minutes and just share my thoughts on where I see the current market and what I expect over the next couple of months. On July 17th, the VIX crossed above the 200-day simple moving average, indicating that fear was beginning to creep into the market. On July 31st, the Federal Reserve held the policy rate at current levels, but indicated that a rate cut was possible at the next meeting in September. On August 1st, the VIX rose to 18.5, the SPY closed down 1.42%, and the QQQ was down 2.42%. Then on August the 2nd, the release of the jobs report showed weakness in jobs growth, and the U.S. unemployment rate rose from 4.2 to 4.3, triggering the SOM rule that is often cited as a recession indicator. During the day, I closed out some of my weaker positions, trimmed some, and entered some short ETFs for technology and small caps, as I expected the Monday open to follow the sell-off on Friday. The SPY did close down 1.86% and the QQQ fell 2.37%. The VIX closed at 23.4, which is above the 20 level many analysts watch. On August 5th, news circulated about the reversal of the yen carry trade, driving the SPY down about 4%, reversing to about minus 3% at the close. The QQQ dropped a bit over 5%, reversing to about minus 3% at the close. The VIX spiked to over 65 before dropping to 38.5 at the close. That VIX level was the highest we've seen since the pandemic and also the great financial crisis. I trimmed my technology short ETF by 2/3 later during that day and eased back into some of the positions that I trimmed on Friday. Looking at the SPY daily chart over the last 3 months, the volume by price shows that most buying volume was in the $544 to $540 price range. Moving to just the last month, the most volume was in the $553 to $557 price range, which is about the same time frame as the VIX crossed above the 200-day moving average. For the QQQ daily chart over the last 3 months, we see 2 areas of buying volume. The first is between 435 and 440, with the second between 480 and 485. Moving to just the last month, the most volume was between 492 and 497. Looking at the QQQ seasonality over the last 10 years, August and September tend to trade flat to slightly negative. Additionally, the SPY 10-year seasonality shows flat to slightly negative over those same months. So what I expect to happen over the next 2 months, I expect to see above average volatility. The buyers at the higher volumes of the SPY and QQQ may seek to recover losses on a rally, which will serve as resistance, keeping prices from rising much above the most recent highs. There may be opportunities to trade some of the swings as the market consolidates over the next couple of months. Thank you. We'll talk to you again soon. Have a great day. Thank you.